Hey there, and welcome to another episode of your favorite finance channel. I'm your host, and today we're diving into something that's more than just a number on your credit report. It's a powerful tool that can unlock doors to opportunities, loans, and even your dream home. But here's the thing, credit isn't just about paying bills on time. In 2026, credit has evolved into a dynamic force that shapes your financial future, and understanding how to master it is more important than ever. Let's break it down together. So where do we start? Let's talk about the numbers. As of 2026, the average FICO score in the US is 712, up from 700 in 2023. But here's the catch. Not all credit scores are created equal. In 2026, a new scoring model called VantageScore 5.0 was introduced, which gives more weight to payment history and less to credit utilization. This shift means that if you've been making on-time payments, your score could be climbing faster than ever. But wait, what does that really mean for you? Let's take a real example. Imagine Sarah, a 30-year-old teacher who's been diligently paying her credit card bills every month. In 2023, her FICO score was 680. By 2026, with VantageScore 5.0, her score jumped to 735. That's a 55-point increase in just 3 years. Why? Because the new model prioritizes consistent payments, and Sarah's habit paid off. But here's the kicker. If Sarah had a high credit utilization rate, like 30%, her score would still lag behind someone with a 5% utilization rate. So, the first lesson is clear. Your credit utilization ratio is a make-or-break factor. Let's dive into that. Credit utilization, which is the percentage of your available credit you're using, is a key component of your credit score. In 2026, the optimal utilization rate is still around 30%, but there's a new twist. Credit card companies now offer dynamic credit lines, where your available credit increases based on your spending habits. For example, if you consistently spend $500 a month on a card with a $1,000 limit, your credit line might automatically expand to $1,500. This means you can carry less debt without hurting your score. But here's a warning. Don't take advantage of that expansion by racking up more debt. If you're using 50% of your credit line, that's already pushing the limit. The key is to keep it under 30%, and if you're hitting that mark, consider paying off some balances or asking for a credit limit increase. Let's take another example. Take Mark, a 28-year-old freelancer who's been struggling with variable income. In 2023, he had a utilization rate of 45%, which kept his score in the 650s. By 2026, he started using a dynamic credit line and kept his utilization under 25%. His score soared to 705. And he qualified for a low-interest personal loan to start his own business. That's the power of managing utilization. But credit isn't just about numbers. It's also about your financial behavior. In 2026, there's a new trend called credit behavior analytics, where lenders use AI to assess your financial habits beyond just payment history. For instance, if you consistently pay bills early, like paying your fight, water and electricity bills, 2 weeks before the due date, that's now considered a positive signal. This is because lenders are looking for people who are proactive with their money. Let's say Emily, a 25-year-old student, started paying her utility bills early in 2024. By 2026, her credit report showed this behavior, and she was approved for a student loan with a 5% interest rate instead of the usual 7%. That's a $1,200 difference over the life of the loan. So, the takeaway here is, your financial habits are being tracked, and small actions can lead to big rewards. Now, let's talk about the role of income in 2026. In 2023, income verification was a big hurdle for people with non-traditional jobs, like freelancers or gig workers. But in 2026, lenders are using new tools like blockchain-based income verification. For example, if you're a freelancer on platforms like Upwork or Fiverr, your income data is now automatically verified through these platforms and shared with lenders. This means that even if you don't have a traditional 9-to-5 job, you can still get a loan or credit card with favorable terms. Let's take David, a 32-year-old graphic designer who used to struggle with getting approved for a mortgage because his income wasn't consistent. In 2026, he used blockchain verification to show his average monthly income was $6,000, and he was approved for a $300,000 mortgage with a 3.5% interest rate. That's a huge difference from the 5% rate he used to get. So, the lesson here is, your income is more visible than ever, and lenders are adapting to new financial realities. But what about credit repair? In 2026, The process has become faster and more transparent. Previously, disputing errors on your credit report could take months, but now, thanks to AI-driven credit monitoring tools, disputes are resolved in under 30 days. For example, if you notice a late payment that wasn't yours, you can now use an app that automatically flags the error and sends it to the credit bureau. Let's say Maria, a 35-year-old nurse, discovered a late payment on her credit report from 2022. She used a 2026 credit repair app, and within 28 days, the error was corrected, and her score increased by 60 points. That's a massive boost. But here's the catch. You have to act quickly. The longer you wait, the harder it is to prove the error. So, the takeaway is, monitor your credit report regularly, and don't hesitate to dispute errors. Now, let's talk about credit building tools for people with no credit history. In 2026, there's a new option called credit building accounts, which are specifically designed for people starting out. These accounts work like a piggy bank. When you make payments, they're reported to the credit bureaus. For example, if you open a credit building account with a bank, you might be required to pay a small monthly fee, and that payment is reported as a positive entry. Let's take Jake, a 19-year-old college student who had no credit history. In 2026, he opened a credit building account and made $50 monthly payments. After 12 months, he had a credit score of 620, which is enough to qualify for a secured credit card. That's a huge leap from zero to a score that can help him build a financial foundation. But here's the thing. Not all credit building tools are created equal. In 2026, there's a new regulation called the Credit Building Transparency Act, which requires companies to disclose how their credit building accounts work and what fees are involved. This means you can't be tricked into paying high fees for something that doesn't actually help your credit. So, when choosing a credit building tool, always read the fine print and make sure it aligns with your goals. Another key point in 2026 is managing multiple credit accounts. With the rise of fintech, people now have access to multiple credit cards, loans, and lines of credit. But managing them all can be overwhelming. In 2026, there's a new tool called Credit Command Center, which is an AI-powered dashboard that helps you track all your accounts in one place. For example, if you have 5 credit cards, the Command Center can show you which ones are being used, which ones have high interest rates, and even suggest when to pay off balances. Let's say Lisa, a 28-year-old entrepreneur, used to struggle with keeping track of her credit accounts. In 2026, she started using Credit Command Center, and within a year, she reduced her debt by $10,000 and improved her credit score by 80 points. That's the power of organization. But what about credit monitoring and identity theft prevention? In 2026, there's a new service called Credit Shield Pro, which offers real-time monitoring and alerts for any suspicious activity. For example, if someone tries to open a credit account in your name, you'll get an instant notification and the system will automatically block the account. Let's take Rachel, a 30-year-old marketing manager who used to worry about identity theft. In 2026, she signed up for Credit Shield Pro, and within a month, she received an alert that someone had tried to open a credit card in her name. The system blocked it, and Rachel was able to report the fraud before any damage was done. That's a huge relief. Now, let's talk about the role of alternative credit data. In 2026, lenders are starting to consider non-traditional sources of credit data, like your payment history for utilities, rent, or even streaming subscriptions. For example, if you consistently pay your rent on time, that's now being reported to credit bureaus. Let's say Thomas, a 27-year-old renter, had no credit history but always paid his rent on time. In 2026, his rent payments were reported, and he was approved for a car loan with a 4% interest rate instead of the usual 7%. That's a big difference. So, if you're in a situation where you don't have a traditional credit history, consider using services that report your utility or rent payments. But here's the catch. Not all services are the same. In 2026, there's a new standard called the Alternative Credit Data Protocol, which ensures that these reports are accurate and secure. So, when choosing a service, make sure it's compliant with this protocol to avoid any issues. Now, let's shift gears to major life events in 2026. Buying a home or a car is a huge financial milestone, and your credit score plays a critical role. For example, in 2026, the average interest rate for a 30-year mortgage is 4.5%, but if your credit score is below 620, you might face rates as high as 6.5%. Let's take Sarah, a 32-year-old teacher who had a credit score of 610. She decided to work on improving her score by paying down debt and using a credit building account. By 2026, her score had risen to 680, and she qualified for a mortgage with a 4.2% rate. That's a $12,000 difference over the life of the loan. So, the takeaway is, your credit score can make or break your ability to buy a home or car. But what about credit and your future? In 2026, there's a new trend called credit for the future, which looks at your credit history in the context of your long-term goals. For example, if you're planning to start a business, lenders might look at your credit history to assess your financial responsibility. Let's say James, a 29-year-old entrepreneur, had a credit score of 650. He used his credit history to secure a small business loan with a 5% interest rate instead of the usual 8%. That's a $3,000 difference over the life of the loan. So, your credit score isn't just about the present, it's about your future. Finally, let's talk about actionable steps you can take right now. First, check your credit report for errors. In 2026, you're entitled to one free report per year from each of the 3 major bureaus, and you can get them instantly through the official government website. Second, keep your credit utilization under 30%. Third, pay your bills on time, especially your utilities and rent. Fourth, consider using a credit building account if you have no credit history. Fifth, use a credit monitoring tool like Credit Shield Pro to protect against identity theft. Sixth, avoid opening too many new credit accounts at once, as this can lower your score. Seventh, if you have multiple credit cards, use the one with the lowest interest rate for purchases. Eighth, if you're planning to buy a home or car, start improving your credit score at least 6 months in advance. So, where do we go from here? In 2026, credit is more than just a number. It's a tool that can shape your financial future. By understanding the new scoring models, managing your utilization, leveraging alternative credit data, and taking proactive steps to improve your score, you can unlock opportunities that were once out of reach. Remember, your credit score is a reflection of your financial behavior, and with the right strategies, you can turn it into a powerful asset. If you've enjoyed this episode, don't forget to like, subscribe, and hit the bell icon so you never miss out on more financial tips. And if you have any questions or want to share your own credit journey, drop them in the comments below. Until next time, keep building your financial power, and remember, your credit score is your key to unlocking a better future. Let's make it happen.